Ed boy.
Gang, what's good? Welcome back to another video, and first and foremost I want to thank y'all for 1,000 subs. We low-key pushing 2,000 subs, so I really want to thank y'all for that, man. I'm very grateful, and I'm so happy that the gang is just growing, and it's just so much, man, you know. So to keep it going, man, I know I haven't dropped one of these videos in a minute, but I got a trading video for the gang, man. I got one coming for the gang. So this video, I'm gonna try to break down a strategy I've been testing for a while now, and try to break it down as much as possible, you know, and just let you know what I look for when it comes to trading and everything. I know it's been a while since I've done a video like this, but that's okay. We can jump right back into it with no pressure. And I'm gonna show you what I do day to day when I decide to trade, or what am I looking for when I trade, you know what I'm saying? So ain't gonna waste no time. We gonna go ahead and we gonna jump right into it. First off, I want to start off by saying that everything that I'm taking, everything that I'm adding, I learned from someone else, and these are ICT concepts. I learned everything that I learned is from the 2022 mentorship. So just to show you what I'm talking about or referring to, I have it pulled up right here for you. You're gonna have to watch this video right here along with the 2022 mentorship, this liquidity purge and revert video. And also I learned the strategy from this guy right here. His channel is Unlimited Bag, but I can't remember his name exactly. I don't know if you've ever given his name. If you know him, you know his name. Let me know in the comment section, or do what you do, you know. But I don't remember which one he breaks down. I think it was this one when he breaks down his actual strategy that he uses. And I've been practicing it as well. I've been back testing, practicing it, and it's pretty good. I like the concepts that he's using. He's using previous concepts that ICT already taught, along with the 2022 mentorship that that ICT taught, and he's applying it to intraday, and I really like it. I'm doing it myself, and it's really useful. So hopefully if you don't get enough info from me, or if you have like questions or anything, you can throw it in the comment section for me. I'll answer it as best as I can for you. But you can also come to his page and ask him, because I believe this is the breakdown video where he breaks it down for you. He's also funded with TMO, which is what I'm trying to get, which is why I took the time out to really try to learn his strategy and apply it for myself, you know what I'm saying? So let me get back into the charts. Let's get back into the charts. Let me show you what's going on with the strategy. But it's pretty good though. The strategy is pretty good. It's pretty solid. It's something that I can really kind of rely on. I'm not even gonna lie, and I apply it day to day. But let me show you what I do day to day, and I believe he does it too. But let me show you what I do day to day when it comes to trading. So the first thing I do day to day, I come to my chart and I look at the daily chart, and I see where are we on the daily chart. Well, last few weeks we were in this range right here on both sides. You can see it on Nasdaq right here, you can see it on the S&P right here. We were in this range right here for a few weeks, but we've gotten past the high point of pretty much this range right here. We pretty much got past the high point. We could be headed for this breakaway gap that ICT mentioned. I think that's where we headed. That's where the next liquidity pool is. That's definitely looking like where it's going. But normally the purging, like the liquidity purge and revert, it evolves around like the purging of old lows. But what the guy that I learned from his videos, what he takes it from pretty much he takes it from the daily time frame and he breaks it down into intraday. So basically the purge, I can't remember exactly everything, but it involves like it involves going below an old low and then reverting back. So for example, just on a daily time frame, let's just say you break this short-term low right here. Let me I'm gonna zoom in for you, so don't worry. Let's just say, for the sake, just on S&P, don't worry about Nas right now. Just say you this candle right here purges this old low right here. So basically what you do, the candle that purges the old low, you want to take this candle and look back 3 days. So it's this candle, and this candle, and you basically want to like for me, you want to like make the important highs, and you want to mark the important lows. But you want to, in this case I'm doing it, is going to be for the intraday basis. So we're not going to worry about the daily time frame. It's just basically understanding that it's purging old lows and taking the candle that purges the old low or high, depending on what you're looking for, and you want to look back pretty much three candles: the candle that purges and the two candles to the left of it or the right of it, depending on what you're looking for. So with that being said, if you were to do it like off of a daily basis, you look for something like this, an old low right here. You look for an old high. In this case, this would be the high that pretty much it'll be probably this one because its high is closer. But if you look on the daily, it takes a while. It's going to take some days, maybe even weeks. If you're the type of trader that wants to wait days or some weeks for that type of trade, then that's fine. That will work perfectly for you. Not someone like me that scalps intraday. I'm trying to look for a move on the intraday chart. So I hope I broke that down good enough for you. If not, go watch the liquidity purge and revert video. ICT explains it perfectly for you, and he explains everything you need to know about it. So with that being said, we're going to jump down to a 3-hour time frame, and I'm going to go to the first trade. I'm going to go to the trade that I took this week, and I'm also going to show you, it was on Monday. I took the trade on Monday, and there's another one on Friday that I took as well. So I'm going to use the replay tool, and let's just say when you first come to your chart, August 8th was Monday. When you first come to your chart, this is what you see. So basically, this old high has pretty much been taken out by this candle right here. So already now when I see this is my candle that purges the old high. So now I'm already looking for my range: this candle, and this candle. So what I do, I mark the high. Actually, no, I'm sorry. I don't use the trend line in this case. I use the horizontal ray. I use the ray. I mark the high and the low of the 3 candles, and that right there is going to give me the range that I want to work within. So this is what I do. I don't have the 3-hour buy side. I don't know why I don't have it labeled, but it's the same. It's in the same context, because I remember I was testing. That's why I didn't have the 3-hour sales. I didn't have the template for it, but it's in the same context. This is the range that I want to work with right here. I'm going off of the higher time frame basis, and already I can tell that, ideally I would like for price to come down here, because I can already see this is an important spot right here. But I have my range marked right here. So now what I do, I take it a little lower. I go to my 15-minute time frame, and now I'm looking for, not only am I within this range, I'm looking for important highs and important lows. What do I mean by that? Well, important highs and lows within this range, I'm looking basically for like not Asian highs, but I'm looking for like old London highs and lows, maybe old Asian high and lows, whatever the case may be. Or I'm looking for those boss highs, those boss lows. What I mean by that is I'm looking for those intermediate term highs, intermediate term lows. You have to watch the 2022 mentorship to refer to for that intermediate term high and low to know what I'm talking about. That mentorship is important. Please watch that mentorship. It is a lot of sauce in that mentorship. So now what I'm looking for here, I'm also going to mark out midnight open and midnight close while I'm at it, because that is going to be very important. And midnight open is very close to sell side, I won't lie. And I'm also looking for New York open, which starts at 8:30 a.m. Eastern time. So understand that it starts 8:30 New York time, pretty much New York time, and I have it marked out. So now that I have that marked out, what I do is now, as I said before, I'm looking for important highs and important lows. This low is somewhat important. Somewhat, if it filled this gap, it would have been nice, but it's still important because it's within the gap, and price could still push up past this. Remember, it's not even 9:30 yet, so we're still waiting for the equities market to open, and we're still waiting. But this low right here is pretty important to me. We're trending up, not trending, we're looking pretty bullish, but that can change because we are well above midnight open and we are well above New York open. So if we continue bullish, I essentially want to be below New York open before I consider a buy. And I already scoped out my buy. It'll probably be right here within this fair value gap if I do want to see a continuation to the upside. But like I say, we're still not even within New York open. So what I would do in this situation, I would also mark out NAS, because you have to consider NAS as well. And I'm going to show you what else I look for when it comes to that as well. Wow, I didn't mean to mark that there. So while I'm doing that, I mark it out for S&P, but I'm also going to mark it out for NAS as well. And I'm not going to put NAS in replay mode because I remember this trade. I took it on the S&P. I'm not going to put it in replay mode. It's okay. But you'll see how I use NAS and US30, because I do use US30 as well. You'll see how I use them both for the confluence to see what I can see. So with that being said, now I have that open, and I'm sorry, let me go back and mark the purging. So this purge occurs actually on this candle. So now I'm looking back. I will look back 3 candles, pretty much the high and low of it. You got this high and this low. That's pretty much my range right there. For NAS, if I was looking to take a trade on NAS. But that's okay. We'll just leave the New York open and the midnight open for now. But because you get the general idea. That's honestly what I want you to understand. And S&P look like it froze up on me. Great. Okay, we back at it. We good. So now I'm back on let me go back to the 15. So now that's what I look for. And not only that, I will mark it here just in case it decides that if it wants to come for new and go above the buy side, just in case, I will mark it out. This is probably an important spot that I want to buy from, and I mark it out for about 3 hours, because 11 is when the time where you don't really want to be in too many trades. But I'm marking it. So now let's get to the 9:30 open. Let's go ahead and let's get to 9:30 open. Let's play it a little bit. And then would you look at that? Even right before 9:30, you get that drop. It's not even 9:30 yet. Let me back it up a little bit, sorry. But that is also another reason why I don't take trades before 9:30. I'm not that experienced to take trades before 9:30, but if I was looking to buy, I wanted to buy from this area. I was looking for it to not go down here so quickly, but that's what happened. That's what it did. So nothing wrong with that. That's okay. This fair value gap on the higher time frame got filled. So that's fine. Nothing wrong with that. But let's go forward a little bit to 9:30 opening, and boom, look what happens. This is where the other play comes in, where I have to implement something else that I know. If I'm not mistaken, Nasdaq dipped into a fair value gap right here, if I'm not mistaken, before it pushed up. If I'm not mistaken, I don't remember which time. I think it was on the 3 hour. I think it was on the 3 hour when it dipped into a fair value gap. Yeah, it did, and it actually filled it. I remember this trade. It actually filled it, that's fine. And then I think I broke it down on the lower time frame to the 15-minute. Yeah, I broke it down a little bit lower so that I can have it filled. So I broke it down to this one, and it dipped right in there, and I think it filled it, to be honest, if I'm not mistaken. Actually, no, it did not. Well, that was a sell side trade, if I'm not mistaken. Yeah, but either way, it dipped. The thing that I want you to see is that it dipped lower. It dipped lower than S&P did. Now, just from off of this, what do you see? You see SMT divergence. What is SMT divergence? Well, if you look closely, where's my tool here? I'll just use trend line. If you look closely, S&P made a higher high while NAS made a lower low. That small correlation would be enough for me to take a trade, because I was already looking to aim for that buy side liquidity. Now I have this trend. I have a higher high. I'm sorry. I have a higher high being made on S&P, and I have a lower low being made on NAS. Now, you could take, if you wanted to take this NAS trade, you could have. There's nothing wrong with that. You could have absolutely taken this Nasdaq trade, but I took the S&P because it's showing me that the S&P is stronger, is the stronger indice right now than NAS. NAS is weaker. It made a lower low, but this essentially was a stop hunt. If you look at it, this essentially was a stop hunt. This was not a stop hunt, but it's showing me that S&P is the stronger indice right now, and I would want to buy the S&P. And this would be an area of interest for me. Let me go ahead and take off that one because it's been filled. This would be an area of interest for me right here. But also, you have to look at something else as well. We do have a fill of this fair value gap right here. So now this candle becomes my my boss high, king high, is what the guy that I'm learning from, he refers to it as that. I'm gonna call it the boss high, king high. It's the same thing. This is the candle that I'm focused on. I need a break and close above this, the high of the fair value gap, and we get that on this candle. So essentially, the guy that I'm learning from, he wants to see this happen twice. Can you take it after it happens once? You absolutely can, but if you want true confirmation, you want to wait for this to happen twice. So what I do, what I've been back testing, I'm okay with the break and close above this. If it only happens once, it's okay. It's not it won't be terrible, but you understand that you can get burnt. That's why you want to wait for two confirmations like this to happen. So now you really want to break and close above this, and you want another one above this. But if you can get a break and close above this and you can get a nice retracement, then this won't be a bad trade. What I also essentially do, I take my Fibonacci and I'll run it to, well, actually I have to wait for a swing to be created. Let me go up a little bit. Boom. That's exactly what I was looking for. I want a swing to be created. I want it to swing back to an area of interest where I like. This would be my area of interest. My trades are based on fair value gaps and breaks of king highs and lows. That is what my trades are based on. I need a fair value gap. Order blocks are still a part of it, but I don't essentially look for order blocks as much as I look for fair value gaps. So what I would do is I take my Fibonacci, I will wait for a swing to be made, and then I wait for it to hit an area of interest for me. Now, this is also important as well. If the fair value gap that has my interest isn't, in this situation, if it is not below 50%, I'm not interested. I don't want to do anything with it. But in this case it is, and it's also in what ICT refers to as an optimal trade entry range. Can you take a trade for a 62% retracement? Absolutely. Anything within these lines right here, you can absolutely take an entry. There's nothing wrong with that. That's if you take your Fibonacci and you just want the bulk of the candlesticks. If you take it from wick to wick, you essentially are still looking for a fair value gap under 50% for a buy, because that's essentially where the optimal spot. But this is what you're looking for. If you do it from wick to wick, you want it underneath the 50% regardless. But understand that your optimal trade entry range changes. Now, if you do it this way, you're looking for it to at least come to the 62%, or you want to get it into the gap. If you take an entry in the gap, it's still a good entry, but you have to understand your risk management. What are you wanting to risk? Because if you put your stops below here, it's a pretty wide risk. So whatever your risk management entails, that's on you. But this is essentially what I look for. I try to do it from the bulk of the candlesticks. I don't try to do it from wicks. There are some times where I will do it from wicks, but I try to do it from the closings, the open, the open and the close of the candlesticks. I try not to do it from the high points, because I want a bulk of where the trading takes place. So with that being said, maybe just play it a little bit forward. We do get and look at that. We get an entry right here, exactly where we need it. Right here, exactly where we need it. Me personally, I can mark it out because I don't want too much things on the chart. So I just put a line right there. I put a box right here and I put a line right there for the OTE. And then I just remove the Fibonacci. I would remove the Fibonacci, but I also mark out, okay, where am I looking to get out? Well, I'm looking to get out up here. if I can. That's essentially take profit for me. I can target this one. I can target this as well. I don't need too many take profit points. One is enough. If I can get from here to here, that's enough for me for now, because I'm still, you know, trying to get the strategy down pat. I'm still working on it, and I am working on becoming FTMO funded. So I definitely want to make sure that I have this strategy down pat before I go ahead and pay for the FTMO challenge. But we got our entry. This is that is a perfect entry. And just to let you know, I took this trade and it was very, very successful. I think this was a nice move, I can't remember how many pips it was, but I think it was like a $2,000 move. And I also want to let you know that anything that I'm doing right now, yes, it is demo. I have not put live funds in it yet. Because why haven't I done that? Because I'm still practicing the strategy. You definitely want to have a strategy before you go into these funded trading, or before you put live money into it. I've been practicing for a long time, and I think I finally found a strategy that I'm comfortable with. So you definitely want to practice before you put live money into this, because just going out there and, you know, just not going out there with no strategy and also poor risk management, you're just asking to lose your money. I'll try to talk about risk management in another video, but for now, let's just stick to the strategy video that I have for you guys. But this is the entry that I have right here. This is my entry, and just to let you know, I really did take this entry. I don't know why it's not showing the executions, which is really weird. I might have to reload it, but I did take this entry. To be honest, I may have to get out of replay mode, but I did take this entry, and like I said, I'm looking for it just to come here. That's all I'm looking for. I'm just looking for it to come here, and that's my take profit point. Just play it out, and then boom, it actually hit both take profit points, and then boom, that was it. That was the trade. That was the entire trade right there. I couldn't believe my eyes. I've been practicing this, and I actually executed it to the T, and it worked. It was perfect. But this is what I do day to day. This is how I trade. This is what I do. This divergence tool is really powerful. I probably won't be able to see it right here, but I also have another chart open just in case I don't look at it. I don't see it. Okay, so there it is. For some reason, the executions aren't showing on that chart. But as you can see right here, I did take this trade right here, and as you can see, let me take the execution off really fast. As you can see, I have divergence right here on this chart. I have the big three laid out. I have S&P on top, I have Nasdaq right here, and I have the US 30 right here. Any divergence that I see that works in my favor is just more confluence to take the trade. And as I see this higher high and this lower low being making, this just gives me more faith, more confluence, more confluence that take this trade for S&P. And that's exactly what it did. It went straight to both take profit points, and I was a happy camper. So as you can see, I did take this trade. As you can see, I took it. One of the entries was a little early. I was being too jumpy. It was my mistake, but I did get that second entry. If I take it out of replay mode, let me see if it'll show. And of course it does this. Okay, there we go. I was wondering why it wasn't cooperating with me there. But okay, so yeah, it was because I was in replay mode. That's why it didn't show those executions. But as you can see, I'm not lying to you. I'm very transparent with my audience. I don't want to lie. I'm not gonna lie about a lifestyle that I don't live. That's not what I want to do. I want to be as transparent with you guys as possible. But I did take this trade right here. I entered a little too early, which was me being impatient on my part. But as soon as I got that spike down to where I wanted, I got a great entry. I actually got a much better entry than what I anticipated. But as you can see, I entered right here. I entered 2 lots at 41.6625. Right here I entered a little early at 41.6975. But I was fairly confident because I saw the stop hunt being on Nas happening, but I saw the S&P didn't want to go any lower than the low that it already made. Plus I have a fair value gap. You can see it all lined up for me. All I had to do was take the trade, and even better, I threw a Fibonacci on the lower time frame, and then boom, it was right there where I wanted it. I got my entry, and then I got out. I took all profits as soon as I can get this Fibonacci off. I took all profits right here, 41.78. I took it all right here, which is perfect. That's fine for me. And I think it ended up being something like a $2,000 move. Yeah, it ended up, this was, no, 88. No, that was the move. Yes, it was a $2,000 move. It was perfect. It was fantastic. But that's a strategy though, man. Like it's real simple. Nothing too complicated. It's straightforward. It was nothing too complicated about it. But that's what I do on a day-to-day basis. Now, you as a learning student, as an ICT student, you have to do these things. Mark out all this stuff, the New York Open, the Midnight Open. I made the mistake of not marking this stuff up and trying to trade blind, but marking this stuff up really helps. It really does help. You really do want to mark this stuff up, and it helps, man. I'm telling you. So let me go to Friday really fast for you guys, because I did this Friday. Friday was just perfect. Okay, gang, before I end the video, I want to show you one more trade. I saw it on Friday. I want to show you what happens in a situation where I don't see a purge, but well, I'm sorry. I want to show you a situation where I don't see a purge. So, in the event that I don't see a purge, like a purge of price or a recent purge of price, I mean, I can mark this out because this was a purge in price. I can mark this out, but this range has already pretty much been dealt this hand because it took out sell side, and we were still trending up. But I want to show you what happens if I don't see a purge. If I don't see a purge, what I typically do is I try to find my range. So let's just go back to Friday. Let's say I don't see a purge here. Let's say this is what I saw on Friday. And I don't see anything. Nothing excites me. Nothing really shows me anything. I mean, I have a miniature fair value gap right here. That eventually gets filled on this candle, but it didn't break and close. It break and closed above on the next candle. So essentially, this is my range. Essentially, this small little area is my range. But as you can see, it already pulled back. It pretty much pulled back 50%. So yeah, it pulled back 50%. It still possibly can come back in here, but as you can see on this candle, it kind of already went down and hit. So it's not really nothing enticing. So what I'll do, if I don't see anything on the 3 hour, I go to my 15-minute. Now it's getting a little bit more interesting. Now I see this. I mark this out because this is my most recent fill on a king high, and I just marked that out. I'm waiting for a break and close. This is a break, but this isn't a close. But what I mean by break and close, I'm waiting for the break and close. I need a break and close above here if I want to go bullish. And let's mark out, and also let's not forget, you have to mark out your New York Open and you have to mark out your midnight open. Don't forget that. That's going to be important. It's going to help you with your analysis. So let's go ahead and let's do that really fast. And as you can see, we're well above midnight open, and we're well above we're slightly above New York Open. If you've been following the mentorship for ICT, you want to be below New York Open. Ideally, you want to be below New York Open before you decide to take a trade. So now, if you look here, nothing entices me. There's nothing going on. Nothing important. Nothing excites me. But remember, we're not at 9:30 open yet, and I'm not taking a trade before 9:30. So nothing entices me. Boom. Now we have a break and close above this high right here. Now remember, the guy Unlimited Bag, I can't remember his name, I'm so sorry, but he says that you want to essentially see two breaks like this. You want to see two breaks like this. This is one. You could take it on one, but essentially the ideal trade is you want to wait to see a second one like this, and you want to do it during New York equities open. Well, not, I'm sorry, you want to do it during the New York session. I apologize, not equities open. You want to do it during the session. We are in the session, but the equities market has not opened yet, so I'm not taking any trades. Let's go ahead and advance it just a little bit. And essentially, I was bullish on this day, but it was a lot of choppy movement like this. Like I take my entries typically on like the lower time frames. If you go on the lower time frames, it was a little sloppy, a little choppy, something I didn't want to really participate in. So I didn't participate in it. But that's essentially what I do. I find my range. If I was to take this trade right here, I wait for my swing, and essentially this is my range. If I want to go from wick, in this situation I probably would have went wick to wick, but like I said, I didn't participate because this was a very choppy, this was a news day, so it also made it a very choppy range to participate in. But as you can see, we also have NAS on this side as well. While S&P was showing the ability that it wants to go higher, you have NAS also showing higher highs, higher lows. This essentially was a lower low. This essentially was a higher low. So NAS was really, if you really want to buy, you could have bought S&P. You could have bought it, but you would have probably got stop hunted and taken out if you're, depending on where your risk management was, depending on where your stop loss was, you would have probably gotten taken out. But this is also why the divergence is important, because when you see this happening, a stop hunt like this happening, I don't want to participate on it because any retracement could possibly take out my stop loss, and I don't want that to happen. So if I were to take this buy today, yesterday, Friday, it would have had to have been on NAS. But I didn't want to participate in this because what I saw on those lower time frames, it was just pretty choppy, something that I didn't want to see. But as you can see, we have the divergence, and we don't want to. The thing about divergence, I want to see it on the 5-minute. I respect higher time frames, but I want to see my divergence on the 5-minute charts. That's what I like. That's what I like to see from them. If I see it on the 5-minute, it's just perfect for me. So as you can see here, this was the news candle, and at this point I'm going to take it out of replay mode. But this is the news candle right here because there was news at 10, and you can clearly see it. That slight crack in correlation is everything. That slight crack in correlation is everything. Is just a big confluence. What do you see? Lower low being made by S&P, higher high being made by NAS. Nas is the strength leader. Buy. Not to say that you can't buy S&P, but you would probably want to buy Nas in this situation. So when you see divergence, you want to buy the stronger indice. You want to sell the weaker indice. In a sense, that's what it is. But you can either or. Like if you wanted to buy S&P, you could. It's just you have to do what you feel is comfortable, is what I'll say. I want to buy what's stronger because I don't think it will stop hunt. Once I buy, I set my stop loss. I don't think it'll stop hunt or take me out. That's essentially what you want to do. But that's pretty much it for the strategy, guys. Hopefully you found this like helpful, insightful. If you have any questions or anything, feel free to leave it in the comment section. If you have any questions, I also have Twitter. I'm gonna leave my Twitter in the comment section. I'm gonna leave my Twitter, the Instagram. I'm gonna leave all that in the comment section for you guys so that you can ask your questions. If you want to say anything, if you need a little bit further explanation, I will do my best to explain everything that I can for you guys. And in the future, I definitely want to make more of these videos for you guys. I'm gonna try to do it. I'm gonna try to catch it live so that you can see what how I trade, and that you can get a firm grip on what I'm doing. You can see how I'm doing it. But in the future, I'm gonna give you guys more trading videos. I promise. They take a little time for me to make. And it just bear with your boy. But other than that, man, just like I said, if you have any questions or anything, leave it in the comment section, and I will get back to you as soon as possible. I'll answer all questions as best as I can. With that being said, man, enjoy your day. I'm out.